All right. Hello, everyone. As you were just told, my name is Jason Levitt. I'm the founder and head of research at levittbrothers.com. I'll do a quick intro myself. I wasn't sure what kind of intro I would get. We offer market analysis and trading ideas to the financial community. We also offer two different trading classes. One is an A to Z masterclass about trading. It covers the nuts and bolts, the mechanics of trading. The second one covers the art of trading, the mindset of a trader, the intangibles. And you can get more information from that about those on our website. We've been in business since 2022, so we must be doing 2002, not 22. So we must be doing something right. Okay, you don't last that long in this industry and count hedge funds, financial advisors, and such as clients unless you're doing something right. So today I'm going to talk about using RSI, MACD, and Stochastic to trade. Okay, that's it. Pretty simple, pretty straightforward. But first I'm going to give you a little bit of a background. The reason for a talk like this is to give you a few ideas to chew on, okay? To make it as a trader, to trade well, you only need one simple trading strategy that works and fits your personality, something you can comfortably execute within your comfort zone. Then you need to study it and practice it in order to build your skills. And while you're doing this, you're going to make slight adjustments and you're going to learn the little nuances. You're going to determine when it works best and when it doesn't work at all. Okay, trading is a skill-based activity, so you need to practice. Just like a baseball player practices hitting or a basketball player practices shooting, trading is a learned and practiced activity. So you just need a simple setup that works, and you need to know the conditions that it works best in. At Levitt Brothers, we have a message board, which is archived going back at least a decade. I could show you charts of a top trader and compare it to 10 years ago, and you see it was the same thing. Same chart, same indicators, same everything. This is how you get really good, okay? It's how you stay really good. You find something that works, you get good at it, and you do it over and over. So my goal is to show you how I use RSI, MACD, and Stochastic to identify and enter trades. You won't necessarily like everything I show you, but if I can just, show you a nugget or two and you can incorporate it and it makes a difference in your trading, then it obviously is well worth my time and your time, okay? I don't think you're going to like everything I show you, but I bet there's probably a nugget or two that you can grab and incorporate into what you do. But one more thing before I get started, I'm going to contradict myself. The exact details of a trading strategy are not the most important aspect of trading, okay? So I'm going to show you how I operate, but at the same time, I'm going to tell you that it's secondary. Most important are the market conditions. If the market is acting well for how you operate, you could buy almost any 10 stocks and make money. And if the market is not acting well, even a seasoned pro with a lot of experience and a track record will struggle to some degree. So market conditions are more important than the exact details of a trading strategy, which begs the question, why am I doing a webinar on the details of a trading strategy? The reason is because it gives you peace of mind. Even within the right conditions, you need structure. You need an approach. It doesn't have to be exactly mechanical, but there does need to be guidelines in place. Otherwise, you're just making things up. You're just winging it, and that just doesn't end well. All right, so let's dive in. First, I'm going to talk about RSI, MACD, and Stochastic while giving you a brief example of what I'm looking for. Then I'm going to use the rest of the time to go over example trades. That's it. Trade after trade after trade. I'm going to teach you what I do by just going through example trades. All right. So here is a very generic slide that shows that I'm going to use in order to show what I look for. As you can see at top, let's just pretend this is the stock price. The stock drops, it rallies up, it drops again, and it rallies up again. What I'm looking for with the RSI is that I'm looking for the RSI to base, and on the first move up of the stock, I'm looking for the RSI to come out of the base, okay? During the downtrend over here, the RSI will probably be at a low level. It might be flatlining at a low level. It might be in oversold territory. We don't really know. We're not really paying attention because it's kind of a weakish stock. It's dropping. But during that first move up from the stock, the RSI will come out of the base. Okay, we want to look for that. Also, the MACD is going to cross up. Okay, pretty simple. And the Stochastic is also going to cross up. Now, I don't play the first move because the first move typically is a surprise. It might be a stock that's weak, it's trending down, It's not on my radar. I'm not paying attention to it. But that first move causes all three of these things to happen. The stochastic crosses up, the MACD crosses up, the RSI comes out of a base and rallies some. Then we get very valuable information. On the move down, instead of the RSI fading all the way back down towards its low, it instead flags, or it might pull back a little bit. But either way, some indication is given that it's not going to go back to its lows, and this downtrend is somewhat being rejected because the RSI is holding up pretty well. The MACD, you can see, does not cross down. It doesn't move up and then cross down like this. What it does is it moves up, gets some distance here, and then it comes down and just kind of kisses itself and then bounces off. The stochastic will simply rotate down during the move down and then rotate back up. And then what I look for to buy over here, actually, let me get rid of this stuff. To buy over here, I'm looking for a continuation here, I'm looking for a kiss over here, and I'm looking for a cross over here. It doesn't happen all at the same time, but it happens pretty close to each other. So you get a move up gets the ball rolling, a move down is, the indications during the move down are that the RSI does not drop back down. It just flags. The MACD does not cross back down. It stays in the uptrend mode. And then we get buy signals over here. So I don't play the first move, because I miss it. I wasn't paying attention, but it gets my attention. And then it's the move down that gives us signals that, hey, something's happening here. The tide is turning. It's probably not going to continue down. And then I'm playing the second move. And a lot of times if you can just play the second move and get a handful of points, you're doing great. All right, let's go through a quick example of each indicator, and then we'll put all three on a chart, and we'll just go through examples for the next 20, 25 minutes or so. All right, so here's NVIDIA. Obviously, it comes out of a base here, rallies up. We get a new high here. Everything looks great. Strong stock, trending up, all that stuff. Then we get a pretty stiff move down. During the move down, the RSI breaks a trend line here. Yes, I draw trend lines on the RSI chart. They work really, really well. So we get a break of the trend line here. We get a break of 70 there. It comes out of the overbought range. That's normal stuff. Stock's going to pull back. The RSI is going to pull back. Then we start getting valuable information. On this bounce, you'll notice that the RSI doesn't move up that much. All it does is flag. If the stock was strong, if this was going to go make a higher high, the RSI would have come up and it would have rallied back up into overbought territory, which would have been a great sign. It would have been a bullish sign. The fact that it simply flagged sideways was a warning that this bounce here was being rejected, and as you can see, the stock ultimately did break down. So the first move down is the warning. Not really a warning, but the first move down kind of gets your attention, and then it's the information gathered on the attempted bounce after that that tells us the stock's uptrend is most likely over. All right, let's look at one with MACD. All right, here's HUT. As you can see, stock, based here. We got a nice rally up here. Strong stock doing well. Then we get a pullback. Normal stuff pulls back. You can see, the high of the pattern here. Stock pulled back to basically to the previous high of the pattern. It's all normal stuff. Strong stock doing well. This could be viewed as a pullback within an uptrend. During the pullback, the MACD crosses down. Then on the following bounce, or this is a decent bounce. It gets close to its high. Notice that the MACD cannot cross back up. If this stock was strong, then the MACD would have crossed back up and it would have done something like that. But the inability to cross back up was a warning that this move up was being rejected and a top was going to be put in place and the market and the stock was going to go down. And that's what happened. We had, instead of getting like a move up and then a correction within an uptrend and then a higher high, we got a double top as we just laid out. All right, now let's look, and then stochastic, I'm not going to show an example with stochastic because stochastic is used with the others, so I'm not going to show it as a standalone. All right, let's just go through examples right now. All right, let's, okay. So here is beyond. You can see came out of a, rallied here, pulled back, rallied up. We got a high over here. Everything looks good. Strong stock trending up, looking good. Then we got a pullback here. During the pullback, this breaks down. Actually, I'm going to delete that. During the pullback, the RSI breaks down, and then eventually it comes down and breaks the 70 mark, and the MACD crosses down, and the stochastic had already crossed down. So, okay, so strong stock trending up. It moves down. This is just nothing more than a pullback within an uptrend. Okay, no big deal. Then we get valuable information on the attempted bounce. You can see this bounce here goes back to the high. In fact, I think it takes out the high. But what happens is this flags. Okay, it does get above 70, but not much. And the MACD cannot cross up, and the stochastic simply cycles up and then recrosses down. So what we have here is I call this my kiss right here. This is a cross, and then this over here breaks down. Okay, so we're being told that this rally here is somewhat being rejected. Okay, instead of getting a rally and a pullback within an uptrend and then a move to a higher high, that attempted rally, we were told, did not have much energy, didn't have much strength, probably wasn't going to keep going. And there's the official end of the uptrend. And so if you're long, you get out. If you play both sides, you go short, then you can go short here. All right. Here is Celsius. Stock based over here on the left side of the chart, breaks out, rallies up. A lot of strength, a lot of gains there. Stock doing great. Okay, but then we start getting a few warnings. First, we get a negative divergence between the stock and the MACD histogram. Stock pulls back here, okay, which at first could be considered nothing more than just a pullback within an uptrend. No big deal. Okay, it's not anything to be alarmed about. But during that pullback, we have a break of a trend line here. We have the MACD crosses down. The stochastic was already trending lower. Okay, fine, no big deal. It's not alarming. It's just a pullback with an uptrend. But then the stock tries to bounce here. During the bounce, the RSI does not bounce at all. It just flags here underneath 70. The MACD does not cross back up, and the stochastic simply rotates up and cross back down. So the combination, so the indicators are telling us that we're not going to get a move, pullback, and then higher high. We're going to get a move, pullback, attempted rally, and then probably a double top, lower high, and we're going down because we got the kiss over here, we got the cross over here. RSI breaks down from this flag, and sure enough, the uptrend was over. All right, here's AAPU, which is the leveraged version of Apple. All right, so you can see stock gap down over here. This is a 60-minute chart. And by the way, this works on all time frames. You can do weekly, daily, hourly chart, 15, 5-minute chart. I have examples of each here. It works on all time frames. This is a 60-minute chart. So this stock gap down obviously was very weak. We have positive divergence here. We got lower low, higher low here. Actually, the divergence is over here. Okay, then the stock comes out of an oversold area. MACD crosses up. Stochastic, which was basing, crossed up. Okay, so we got stochastic here, MACD, and RSI all moved up on this bounce. Okay, so like we're not even watching the stock over here, but when all this stuff happens, we're like, hey, we got potential here. Then the stock drops. During this drop, the RSI flags. It pulls back a little bit, pulls back into oversold territory, but not by much. It flags, and you can see the kiss over here and the stochastic cycle down and cross there. So the combination of MACD kissing here, stochastic crossing there, and then RSI breaking out to the upside told us that even though the stock dropped over here to a lower level, that was going to be rejected. It was going to be an undercut and recover, and sure enough, that's what happened. And you can see like the smoothness of the MACD histogram here, where you have a positive divergence, crosses up, comes down and tests, and then moves up again. It's a really nice sequence, something I look for, and it has a high success rate. And of course, when this plays out where you get above zero and then it doesn't drop back low, you're going to get a positive divergence here. So everything played out really well with this one. All right, next one, HUT. You've seen this one because I showed it a few minutes ago. Okay, so I won't talk too much about it. Stock moved up, moved down. During that move down, the RSI broke, came out of an overbought territory. MACD crossed down, negative divergence with the stochastic, which I don't really look for too much, but then it crossed down. Say no big deal, strong stock doing well, just pulling back within an uptrend. Then you have this attempt to bounce. Okay, but during the bounce attempt, notice that the RSI just kind of flags here. It cannot get back into to oversold, to above 70. MACD kisses, stochastic cycles up and crosses down. So if the stock was strong, so you can see, well, I'll first say, like, obviously it breaks down here because you got, the kiss over here, the cross over here, that breaks down, and and down it went. So if the stock was strong, then the MACD would have crossed back up here. This would have kept going here and maybe held its level. RSI would have, done something like this. So if the stock was strong, if this was going to keep going and, move up, move down, and move up to a higher high, then these indicators would have moved higher. MACD would have crossed up. Okay, but the indicators were telling us that move just didn't have a whole lot of energy and it just wasn't going to last. All right, here's crowdsource. Okay, so weak stock trending down here fell hard. Okay, but then you get this move up here. That move up here gets our attention. Okay, the RSI breaks out of a base here. You can see this base going back. This is a 60-minute chart, so it's only a couple days. MACD crosses up. Stochastic was already trending up. Then you get this subsequent pullback. Okay, so we don't know if it's like a pullback within a newly formed uptrend, or if we're going to go back down and test the lows, or if we're going to go below the lows. But during the pullback, the RSI simply flags. The MACD never crossed back down. It held up, and the stochastic simply rotated down and then crossed back up. So the combination of all that stuff tells us this move down, this is a newly formed uptrend. Well, I wouldn't say it's an uptrend, but like this downtrend here is ending, and we're probably going to go up from there, and that's exactly what happened. All right, here is Freshworks. Okay, came out of a base here, consolidated, broke out again. Okay, and you can see it went up to a high here, so strong stock doing well. Then we get a move down here. Okay, during the move down, the RSI breaks down, as you can see. MACD breaks down or crosses down. Stochastic was already moving down. Okay, then we get this bounce. We don't know. It could be a bounce within a newly formed downtrend. It could be the resumption of the uptrend. We don't know. But so we look at the indicators, and stochastic could not get up into oversold territory again. It just simply bounced and just kind of flagged a little bit there. MACD was not able to cross back up. Stochastic rotated up and crossed back down. So that bounce here was being rejected by the indicators, and sure enough, we sold off again. And then it happened again where we got another bounce here. The RSI flagged, kiss here, cross here, and it continued down. All right. Here's Lightbridge, another one of the stocks that we traded. So stock, obviously, you can see ran up on the left side of the chart in October, then came all the way back down, or almost all the way back down. As the stock was falling over here, you can see RSI was down, 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 down. But then we started to get warnings, a little bit of hints that the stock might be turning. So we got positive divergence here with the MACD histogram. Okay. Then on this little bounce here, the RSI broke out of its downtrend. and the MACD crossed up. Okay, so we got a nice positive divergence, then cross up, and the stochastic also crossed up. Okay, so that first move, we missed the first move because over here, there's no reason to even be paying attention to the stock because it's just a weak stock in a downtrend. It's going down, down, down. And who knows? Maybe it's going to go all the way back down to like $3, which is where support was way back here. You just don't know. Okay, but that first move up here kind of told us like, hey, maybe the tide is turning. So then on this subsequent move down here, notice that the RSI didn't fall too much. The MACD did not cross back down. Okay, so we were being told that like, hey, the tide seems to be turning here. On the next bounce, which could have been played, RSI comes up again and makes a higher high, like right over here, and the MACD expands, and stochastic moves up again. So things are starting to turn here. Then we get another move down. So this is like a double play. I've showed you a lot of examples here that they work like the first time, but in this case, like we have like a double. So during this move down right here, RSI again just flags down. It doesn't fall too much. MACD comes down and kisses. Stochastic comes down and cycles down and then crosses back up. Okay, so like all of this matches up. If I were to, let's see if I were to box this in kind of like this, that's not the best, but the combination of, the kiss here, the cross here, breaking out here tells us that, this is a base, we're going higher. We're not going to go back to the lows, and this is actually a bottom here. All right, let's go to the next one. All right, here is MSTU, leverage version of MicroStrategy. 60-minute chart. Okay, so stock is weak here, trending down. You can see RSI trending down, lower highs, lower lows, keeps going. And then what we do is we got a nice move here. Out of the blue, we get a nice move. Okay, RSI breaks out, MACD breaks out or curls up, stochastic moves up. Then we get this move down here. And during the move down here, RSI simply flags, MACD fails to cross back down, stochastic cycles down, and then curls up. So, first move gets our attention that there's a possible trend change underway. And then that move down right here, we're being told that, hey, we're probably, the downtrend is probably over. We're going to go up from here because the indicators told us. Like if the stock was weak, because this is actually a pretty big move down. Like that's a pretty decent move. If the stock was weak, this would have gone, whoops, bad drawing. That would have gone lower. MACD would have crossed back down. Stochastic would have bounced, maybe a little bit and crossed back down. The indicators would have told us that like this move was probably the beginning of another move that was probably going to go to a lower low. But the indicators told us by virtue of holding up that the move down was probably over. All right, here's NNE. So daily chart, this is from November. Okay, so stock obviously ran up huge, made a lot of money on this one, gave it all back. Then we have this rally here. Okay, during that rally, RSI breaks out of a base. MACD curls up after having formed a positive divergence there. And then, of course, the stochastic was already crossing up. Then the stock rotates down. Okay, we use the rotate down to gather information. In this case, the RSI actually came down kind of low. It came down to the previous breakout level. Not too much damage, but a little bit more than I like to see. MACD crossed down briefly for like 1 or 2 days and then crossed back up. Okay, it's one of those things that like you have rules, but then you know when to break the rules. Okay, I'll give it some leeway here. Okay, and then the stochastic had rotated down and then come back up. Okay, so instead of getting a move down, bounce within a downtrend, and then a continuation, we got a nice W double bottom pattern, and the indicators told us help tell us that we're probably going to get a double bottom as opposed to a lower low. And you know what? Like this move here, that's like really good. If you can get like just half of that, you're set. If you get like half of this move with a decent sized position, you could be a full-time trader. Okay, you don't have to trade a lot of stocks. You don't have to trade that often. You don't have to use a ton of indicators. You don't have to make things overly complex. You could just, if you did this like once a week or once every 2 weeks with a little bit of size, you're a full-time trader making decent money. Okay, you don't need to have a lot of different strategies. You don't have to make things complex. You don't have to follow the news that much. You don't have to hang out on Twitter all day long trying to figure out, reading everyone's analysis. All right, here is a 5-minute chart from yesterday. Okay, we got really good signals yesterday. So wanted to go through this. So stock opened up, trended down, as you can see. We got positive divergence here from the MACD histogram. Then on this bounce, MACD crossed up and RSI, as you can see, broke out right there. So this first move here is just a bounce within a downtrend. Okay, lower highs, lower lows. It bounced. It got rejected right here by the 21-day moving average, which is the orange line. But during that bounce, we got the RSI coming out of a base, and we got a positive divergence plus the MACD crossing up. Stochastic was already moving up. Then we got this following drop to a lower low. But notice that on the move to a lower low, the RSI flagged. The MACD never crossed down. The Stochastic simply cycled down and recrossed up. So everything was telling us that, positive divergence here, and then we got a lower low, and then positive divergence here, and RSI breaking out and then holding, and MACD crossing up and then holding, not crossing back down. Everything was telling us that this low here was going to get rejected. It was going to be like an undercut and recover, and that's exactly what happened. This is a 5-minute chart from yesterday from SPY. All right, here's CONL. Same thing, 5-minute chart yesterday. I'll go through it rather quickly, starting to run short on time here. Lower low here, positive divergence, MACD or RSI coming out of a base, MACD crossing up, Stochastic coming out of a low, and then move to another lower low. And what happens is we get lower low here, higher low here. MACD never crossed back down. Stochastic cycled and then moved back up. And then RSI flagged, and then you can see broke out. So positive divergence, another positive divergence, and then we got a really good move from 17 up into the mid-18s. Okay, let's go through one more here. All right, here's Oklo 2-hour chart from last September. Weak stock trending down. On this bounce, we get RSI coming out of a base, trend lines support taken out, MACD crossing up, Stochastic moving up. Then we get a test of the low, but during that test, the RSI simply flags instead of dropping too low. MACD never crossed back down. Stochastic simply cycled down and then moved back up. And so then we got, obviously got a nice bounce after that, and it continued. Maybe we'll do one more here. Here's Palantir. Sloppy base here, breaks out, and then we get a move down here. So as of over here, it's a strong stock trending up, broke out of a base, everything looking good. We get a move down. During the move down, trendline resistance here is broken out. MACD crosses down. Stochastic was trending down. All that's perfectly fine. There are no warnings there, okay? When you get a move down against an overall trend, you're going to get all these crosses. Then during this flag here, RSI just simply flags. MACD cannot cross back up. And the Stochastic cycled up and then crossed back down. And then obviously, so that's, at that point in time, it's pretty obvious that we're not going to go back to the highs. At that point in time, we're going to go down to the lows. All right, so my time is up here. Thank you for being here. All it takes is a simple strategy. Practice it, study it, get good at it, And if you just have one good trade a week, one good trade every 2 weeks is all you need. This is how I operate. Hopefully you can grab a nugget or two. Maybe you incorporate it into what you do. You just need one simple setup that you can comfortably execute within your comfort zone. And you could do this as a full-time gig if you want, or you can do it on the side. And with that, I will throw it back over to the Money Show. Thanks, guys.